7 question here, which is on Oak Healthcare Centre. So the following were included in the assets and liabilities of the Oak Healthcare Centre Limited on the 1st of 1st 2006. Buildings €500,000, equipment €70,000, furniture at cost €20,000, stock of health food for sale €1,300, heating oil €640, creditors for supplies to health centre €1,250, 5% investments €70,000, contract cleaning prepaid €250, clients fees paid in advance €4,300. Authorised capital €430,000 and issued capital €300,000. All fixed assets have 2 years accumulated depreciation on the 1st of 1st 2006. The following is the receipts and payments account for the year ended 31st of the 12th 2006. So here we have the receipts and payments account there for the whole year 2006. The following information and instructions are to be taken into account. Number 1. Closing stocks at the 31st of 12th 2006, shop €1,600 and heating oil €250. Note 2. Cleaning is done under contract payable monthly in advance and includes a payment of €300 for January 2007. Note 3. Clients' fees include fees for 2007 of €3,000. Clients' fees in arrears at the 31st of the 12th 2006 are €450. Note 4. The closing figure for bank does not take into account a dishonoured cheque €100 received from a client and lodged in late December. Note 5. Wages and salaries include €12,000 per annum paid to the receptionist who also runs the shop. It is estimated that 70% of this salary, €200 of the light and heat, €500 of the insurance and €340 of the telephone are attributable to the shop. Note 6. On the 31st of the 12th 2006, the Oak Health Centre Limited decided to revalue buildings at €680,000. Note 7. Electricity due 31st of the 12th 2006, €270. Note 8. Creditors for supplies to the Health Centre Limited at 31st of the 12th 2006 are €1,400. Note 9. Depreciation to be provided as follows. Buildings 2% of cost for the full year, equipment 15% of cost per annum, furniture 25% of cost per annum. So you are required to A. Calculate the company's reserves on the 1st of 1st 2006 for 20 marks. B. Calculate the profit and loss from the shop for the year ended 31st of the 12th 2006 for 12 marks. C. Prepare a profit and loss account for the year ended 31st of the 12th 2006 for 36 marks. And D. Prepare a balance sheet on the 31st of the 12th 2006 for 32 marks. So first part A, calculate the company's reserves on the 1st of 1st 2006. So all this is totaling up the sum of all of the assets on the 1st of the 1st 2006 and taking away the sum of the liabilities on the 1st of the 1st 2006. So if we look at the start of the question, it tells us that the following were included in the assets and liabilities of Oak Health Centre Limited on the 1st of 1st 2006. So we have buildings, equipment, furniture, stock of health food for sale, heating oil, creditors for supplies, the health centre, 5% investments, contract cleaning prepaid, clients' fees paid in advance, authorised capital and issued capital. And it says to us, and here I've highlighted in the blue box there, all fixed assets have 2 years accumulated depreciation on the 1st of the 1st 2006. So your fixed assets there are your buildings, equipment and furniture. So all of those have had 2 years accumulated depreciation on them. So what is the rate of depreciation? Well, we saw that earlier on when we were reading down through the question in note 9. Depreciation is to be provided as follows. Buildings 2% of cost for the full year, equipment 15% of cost per annum and furniture 25% of cost per annum. So the depreciation on buildings and grounds, 500,000 by 2% by 2 years is 20,000. 2 years depreciation on equipment is 70,000 by 15% by 2 years is 21,000. And then 2 years depreciation on furniture, 20,000 by 25% by 2 years is 10,000. So then we have the stock of health food for sale, 1,300. That's an asset. Heating oil is an asset. Creditors for supplies to health centre is a liability. 5% investments is an asset. Contract cleaning prepaid is an asset. Clients' fees paid in advance, 4,300 is a liability because you owe them. The membership, and then we have issued capital 300,000. That is a liability as well, because the business owes that money back to the owners. Okay, so assets there, we're putting them in, and we're taking away, in the fixed assets, we're taking away the accumulated depreciation. So it should look like that for now. And then what you need to do is you need to look back at the question and see, is there anything else hiding out in the receipts and payments or in the additional information that are assets or liabilities at the start of the year. So here, if we're looking here, we have the bank 7250. So 7250 is an asset there. And then we have liabilities. So we're looking back and we're looking at the bank loan here. So you see repayment of 50,000 loan on the 1st of the 5th 2006 with 18 months interest. So we have 57,200 euro there, and that is 7,200 loan interest and then 50,000 euro loan. So 7,200 loan interest is 18 months interest. So 7,200 divided by 18 months is equal to 400 euro then interest per month. Okay, so 400 euro per month. And how do we know we had this loan at the start of the year and loan interest due? Well, it was repaid on the 1st of the 5th 2006. So when would we have had that loan taken out from? So we obviously had that loan in 2005. If we only had it for 4 months, or we had it taken out in 2004 actually, we had it for 4 months of 2006. So therefore, before 2006, we had it for 14 months. So therefore, we owe 14 months interest as at the 1st of the 1st, 2006. So looking at our statement of reserves there, we have loan 50,000 euro, and then we have loan interest due 7,200 divided by our 18 months is 400 a month, multiplied by 14 months, and that is 5,600 euro there. So we can tot them all up. So the total of the assets there, 618,440, and then the total of the liabilities, 361,150, and then the reserves on the 1st of the 1st, 257,290. So part B here is asking us to calculate the profit or loss from the shop for the year ended 31st of the 12th 2006 for 12 marks. So what we're going to do is just scan down through the question looking for any information about the shop here. So we have stock of health food for sale, so stock for the shop there, 1,300 at the start of the year. We've got shop receipts, 65,000. We've got purchases of the shop, 42,100. We've got closing stock at the shop, 1,600. And then note 5, we have wages and salaries include 12,000 per annum paid to the receptionist who also runs the shop. It is estimated that 70% of this salary, 200 of the light and heat, 500 of the insurance, and 340 of the telephone are attributable to the shop. So shop receipts then 65,000, less cost of sales, opening stock 1,300, plus purchases 42,100, minus closing stock 1,600 is equal to 41,800. Then that is gross profit 23,200. Less expenses. So our wages and salaries, 12,000 multiplied by 70% is 8,400, 200 for light and heat, 500 for insurance, and 340 of the telephone and broadband. Then total expenses there, 9,440, and then profit from the shop, 13,760 euro. So that is our shop profit and loss then. Then we have to do part C. So prepare a profit and loss account for the year ended 31st of the 12th 2006 for 36 marks. So what we have to do then is profit and loss. What do we need for here? We need all of the expenses and all of the revenues then for that year. So incomes and expenditures. We do not put any balance sheet items in here. So we want to look at the receipts and payments, and then we're going to work our way down. So we have here balance of bank that has already been used and is a balance sheet item. Shop receipts has also been used as well. Remember, we got our profit and shop, so we can put our profit and shop straight in there, and we've used our purchased from the shop as well. Be careful for the balance sheet items, do not put them in here. It might be worthwhile writing BS beside the balance sheet items so you know you won't forget them when you're doing your balance sheet. So first of all there we've got clients fees, so 252,600. Now so we always want to look up above and down below for any other information got to do with clients fees. So at the start of the year we have clients fees paid in advance 4,300. So that relates to this year. So clients fees prepaid at the start of the year, that relates to this year. So we plus that 4,300. And then down the following information and instructions we have in note 3, clients fees include fees for 2007 of €3,000. So that is for next year. It doesn't relate to this year. So we're going to minus that from our figure for the year. So minus 3,000 there. And then it says clients fees in arrears, so clients fees due that are owed to us, €450. So we plus the €450 there. So €254,350. Then we have investment income. Now, what we want to put into the profit and loss is the investment income for the whole entire year, not just what they have received. So we want to look up to our 5% investments. So 70,000 5% investments should yield €3,500. Now there's nothing else about investment income down here or up here. So in the balance sheet, we should know that we're going to have €500 investment income due there. So then we've got our expenditure. So we're moving across to our payment side and we have first of all here laundry. So we have laundry, €800 there. Then we have wages and salaries. Now we noted earlier on, so we're always constantly scanning at the top, scanning at the bottom. We noted earlier on though that the shop, there was some of the secretary's salary that went to the shop. So we are going to minus that 8,400 from there. And that is the only note there. So €77,820. Then we have repayment of the loan with the 18 months interest. Well, loan interest, there is 4 months loan interest that relate to 2006. So the loan interest we worked out earlier on was €400 per month. So €400 by 4 months is €1,600. The next items we have are equipment and new extensions. They are balance sheet items. They will not go into the profit and loss. Then we have cleaning. So cleaning, 2,600. So did we have any notes on cleaning up here? Yes, we did. We had contract cleaning prepaid, €250. So that relates to this year. So we are going to plus that 250 there. Then down below in note 2, we have cleaning is done under contract payable monthly in advance and includes a payment of €300 for January 2007. So therefore, that is for next year. So we are going to take that out of this year's accounts. So overall, we have €2,550 for the contract cleaning. Next is light and heat. So we have 2,800 there. Now, if we look for light and heat up here, we have heating oil 640. We are going to use that. So we're going to plus the 640 here. Then we are going to scan down through the bottom. We have heating oil, stock of heating oil at the end of the year, 250. So we are minusing 250 here. Then what we're going to do is scan down through the rest of it. 200 of the light and heat went to the shop. So we're going to minus that 200 light and heat from there as well. And then in note 7, it says electricity due at the end of the year was €270. So that relates to this year. So we are going to plus that €270 there as well. Next, we have insurance. So insurance, the only thing that we have, other note that we have on it, because we've scanned down through the question a few times now. So you should know that 500 of the insurance went to the shop. So we minus 500 and we get 5,700. Next we have telephone. So again, it was only note 5 that affects the telephone. So 340 of the telephone is attributable to the shop. So 1660 minus 340 is €1,320. Then the last thing that we have here is purchases of supplies. So 36,800. We look up at the top of the question and we have creditors for supplies to health centre 1,250. So at the start of the year, we owed 1,250 to creditors for supplies, 1,250. So we have to take that away because that related to last year. So minus 1,250. And then we have in note 8, creditors for supplies to the health centre at 31st the 12th 2006 are €1,400. So then we add €1,400 there because that relates to supplies that were purchased in 2006. So altogether €36,950 in the purchase for supplies. So that's all of our items from the receipts and payments. So we are going to scan down through the 9 notes then, and we're going to see if there are any other incomes or expenditures here. So closing stocks at 31st of the 12th 2006, we've got the shop and the heating oil. Then we have cleaning is done under contract, so that's not, we've already dealt with that. Number 3, we've dealt with that. Number 4, we have already, or we will deal with that in the balance sheet. Number 5, we've dealt with that already. Number 6, we have as well. 7, 8. So next, the only thing that we have left to do is note 9, which is all about depreciation. So we have to be careful to include the new amounts that were purchased. So the €500, okay, €500 at the start of the year, the buildings, but then they purchased new extension, €70. So €570,000 by 2% is €11,400. Then we have depreciation of equipment. So we have then €70,000, and then we have equipment €14,000. That's €84,000 multiplied by 15%, and that is €12,600. Then we have depreciation furniture, so that is €20,000, and no new furniture was bought, so it's just the €20,000 multiplied by the 25% of cost, and that is €5,000 there. We tot up all of our incomes, we tot up all of our expenditure, take the expenditure away from the income, and we get net profit for the year €112,000, €610. So then we add our reserves from part A, 257,290, and that gives us profit and loss balance 31st the 12th 2006 of €369,900. So that is our profit and loss account for the year complete. The last thing that we have to do then is part D, prepare a balance sheet on the 31st of the 12th 2006 for 32 marks. So what we have to do here is just all of our assets and liabilities at the end of the year. So all of them. I would suggest you would do the layout. You can do your layout and complete it at the same time as your profit and loss, but I would always suggest coming back to the balance sheet and scanning down from the start of the question to the end every single time you complete this as well. So fixed assets then, if we just look at the fixed assets first, we have buildings, equipment, furniture, all the fixed assets of 2 years accumulated depreciation. We bought new equipment and a new extension, and then at the end of the year we revalued buildings at €680,000. So then what we have to do is think about buildings and grounds. So 680 is going in here. What do we do when we revalue buildings? We do a revaluation reserve. So it is, revaluation reserve is the difference between the 500,000 buildings that you had at the start of the year and the 70,000. So that is €570,000. And then the buildings were revalued up to 680,000. So that is a difference of €110,000. So this €110,000 is the difference between the new value of 680 and the cost €570,000. Then the 34,000 is the depreciation for the 2 years plus this year's depreciation. So altogether your revaluation reserve is €141,400. Then we have our equipment. So our equipment is 70,000 and 14,000, which is 84,000. Then we have 2 years accumulated depreciation there in the equipment, 21,000, plus this year's depreciation, 12,600, which is 33,600. So net book value, 50,400. Then we have furniture. So 20,000 is the cost of furniture. And then what we do is we take away 2 years accumulated depreciation there, and also this year's depreciation of 5,000, which is 15,000 altogether. So net book value there, €5,000. You tot all them up, you add in your investments, your 5% investments, which is 70,000. So that's all of your fixed assets there. Then the next item that we have to do is into our balance sheet, we have our long-term liabilities there, our issued capital. We have to put in our authorised as well. So we have 430,000 authorised ordinary shares, and 300 of those are issued. So then the next item then is our balance at bank, 7,470. Okay, so that is an asset. It's going to be brought down on the debit side. So 7,370. Now, why have I minused €100 here? I have minused €100 here because you'll see in note 4, the closing figure for bank does not take into account a dishonoured cheque, €100, received from a client and lodged in late December. So that is also going to go into clients' fees due as well, which we will see now in a second. So our bank figure is 7,370. Our investment income, we learned about this earlier on. We are due to get 3,500 for the year, but we only received 3,000, so therefore 500 is investment income due. Then note 1, we have the closing stock for the shop and the heating oil. Then in note 2, we have contract cleaning prepaid, €300. Then we have in note 3, clients' fees include fees for 2007 of €3,000. That is clients' fees prepaid for next year. So that is a liability because you owe those clients that membership. And then the second part of note 3 there, clients' fees in arrears, 450. But remember, we had €100 dishonoured cheque, so we're going to add that on there, €550 there then. Then we are going to have in note 7, we have electricity due, €270. And then we have note 8, creditors for supplies to health centre on the 31st of the 12th are 1,400. So we can then put in our profit and loss balance for part C in there, as always it's going to be the last thing in the balance sheet there. And then we tot them all up, and the total net assets and the capital employed are €811,300. So €811,300.